Hamish Tyrwhitt, welcome to the programme.
Thank you very much.
Now, you say today, I truly believe we're back on track. I can see the signs, under new management. But you did have a shocker as a company last year. How are you going to restore investor trust?
I think the key to Leighton is we're a project-based business. So all projects start, all projects finish. So although we're an enormous company, we actually have the ability to affect and implement change quite quickly. So the main thing we've done is revisit what the role of holdings is. And Leighton Holdings is a strategic management company, and to look at where our balance sheet is deployed, what the markets are like in the future, where we want to position our operating companies. And we've got a model which is about geographic diversification, sector diversification, operating company diversification, and that really gives us a portfolio of business and sectors. And what's absolutely fabulous at the moment is that Leighton are positioned across Australasia, and we're the only company that's providing those services through that entire area, and we're benefiting off the growth of and the urbanisation of China and India.
So let's go to the projects that have needed clearing up. There's the airport link in Brisbane, there's the Victorian desalination plant. Now, both those have made you quite jaundiced about PPPs. What's the new approach?
I think there's a couple of things. So firstly, on our risk management reviews and looking at lessons learned, we need to get involved with projects at Leighton Holding level at its inception, make sure that we've got the right team bidding the job, make sure we've got the right partners, make sure we have the right structure, the right resources. So Leighton Holdings will now get more involved at the early stages of these major projects. And it's not just about PPPs, it's about projects that have a higher risk profile, and there's lots of different measures in that. Contract size, the amount of balance sheet it's leveraged off, etc. The fact we had those two projects at the same time is, obviously was a huge challenge to the company. But what's great is the team engineering-wise have got through on both of those jobs and done an incredible job to deliver them.
Just on the desal plant, it was at the time quite a horrifying benchmark for many employers in terms of the workers' pay and conditions agreed. You say now that one remaining risk is productivity, I think on the engineering side. Are you worried about these sorts of conditions being pushed for by unions more broadly? Because you are an enormous employer, aren't you, in Australia?
I think the key with the productivity issue is things like the roster, where if you're on a 4-day cycle and you're doing a job that's complicated, that baton change of people handing over one job to another person creates a lot of inefficiencies. So the main thing, the tradesmen in Australia are incredibly skilled. Australia's got some of the best and most productive workers as far as their individual skills. What we've got to do is create an environment that enables them to be productive and be efficient.
But then you're talking about more flexibility, aren't you? So that is again an issue about the Fair Work Act, isn't it?
Yes, correct.
Going to your gearing, it's going up in June, I think 43% by June, which is at the high end of your target range. You've got to refinance, I think, quite a lot over the next 2 years. Credit rating's gone down a notch. Are you confident that you will be able to refinance at reasonable levels? I
think the confidence was reflected in the dividend that we paid out today, or that we've announced today, and we're sitting at 32%, which is really that's below the range that we have. So that shows the strength of the business at the moment. We have to fund the balance of the loss on Airport Link and VDP over the next couple of months, which is why it peaks. But then you start seeing the back end of the year, projects coming through that are more profitable and better quality, and that will reinstate the gearing down to more traditional levels. We've got a lot of initiatives in place which are going to improve the quality of our balance sheet, and obviously, clear signal to market today with the dividend announcement that we made is that we're confident of our ability to fund the projects internally.
Hamish Leighton is the thing you said today keeps you, it's the one thing that keeps you awake at night. You've made provisions for additional funding of $136 million. I think your CFO, Peter Gregg, said today that if you retired all the loans, the leverage would be down to about 6% for the whole company. I mean, it is a massive commitment there. Is that the last call, that $136 million, is that the last call you're likely to have to make?
I think the thing to look with Hamish Leighton Group is it's 3.5–4% of our work in hand and our revenue. So it's not a significant growth component of the company, but as you rightly point out, it is a significant drain on the balance sheet. We need to work through that. The business model there has to change so that we start freeing up the balance sheet, and that's our focus over the next 12 months.
Because it would be a big cost if you had to exit it all of a sudden, wouldn't it?
Well, obviously that's not going to happen. Yeah. The business there is viable going forward, and to recover the receivables that we have is a matter of time and running through the issues, and that's what we're focused on at the moment. And if you look at that business, once again, it's not about what its contribution is to our growth. It's how we reinstate and get the balance sheet back that's currently committed to that business without generating the returns that we need.
Do you think then it'll require more provisioning in later?
We're not forecasting anymore. Even as Peter pointed out today, the facilities that we put in place are there to make sure that we have the ability to manage through the next 12 months. It doesn't necessarily mean that we'll draw them down.
All right. This AFP investigation in Iraq, which came up this morning, shares have been hit as a result of that announcement. I think the market sort of immediately suddenly thinks AWB scandal and this sort of stuff. Are you worried that this will impact your reputation over there?
No, look, I think the issue there, all I want to point out is that, as a company, our values, our brand, our culture are absolutely key to us, and this was, the issue was identified by Leighton, and we went to the authorities, and we're not at liberty to talk any more about this because it is something that's ongoing at the moment. But I can assure you, for Leighton, it's about values, culture, integrity, discipline, and that's what we're focusing on. And I believe, in the end of the day, that the company as a whole is a fantastic business with a great reputation, and that's been proven through the decades.
Can you give the market any sense of how long this will take to clear up?
We have no idea, even if there is an issue, so I can't comment on that.
Cash, you said today, was absolutely critical to you, maintaining the momentum of your day-to-day construction jobs. There's much more control over cash management. Your shareholders, however, Hochtief and above that ACS, are struggling much more on that front. Are you absolutely confident that the governance setup that ACS agreed to, delivering an independent board for Leighton and also a limit on the shareholding that Hochtief can have, are you absolutely confident that that will stay rock solid?
Well, there's two questions you're asking. One is in regard to dividend payout or cash, and I can assure you all of our shareholders that I've spoken to, invest in Leighton because we're a yield stock. So, that's been, one of our hallmarks. It's been one of the components of the company, is that we've always been a company that's been a good yield stock. So, that's something we want to continue for all of our shareholders. As far as the governance structure, that's really, a question of the chairman, but I can assure you we see no influence of that whatsoever. And the Hochtief have been a shareholder in Leighton now for 25 odd years, and we've had
but
huge...
ACS is new.
We have no visibility of ACS whatsoever. Hochtief are our shareholder, and Hochtief have been our shareholder for 25 years, and we have a great relationship with them.
So small shareholders can feel safe?
Very much so.
Okay. And the issue of morale, because there has been a big change at the top. Your duo with Peter Gregg now is one would hope it would be a King Adamsus repeat. Do you think morale is much improved from last year?
I think, with 55 or 54,000 staff, the issues that were played out last year were played out in a small component of the company. And remember, we're made up of a series of operating companies, and they all have their unique culture, their unique DNA, and certainly within those companies there's fantastic morale. At Leighton Holdings, we all, we enjoy working together. Yeah, Peter Gregg and I have a great relationship, as well as the relationship with all the rest of the people in Holdings. So, it is very much, for us, it's about the future. We're very lucky to be in a market that's producing very good trading environment for us. And Leighton, one of our values is success, and we're really, really good at being successful. And when we are, the morale obviously lifts.
Yeah, it's a good value to have. And finally, Australia, I think I'm right in saying that you said Australia is to remain about 70% of your work. And, why not with margins over 10% and on the mining side in particular. But you've just come in from Hong Kong, from Leighton Asia. Is that 70% going to remain the contribution? Because what is going to happen with Asia?
I think the thing is that we're not replacing Asia with a decline in Australia. you know, Australia's continuing to grow. So if we're actually trying to change the ratio and get more of our work offshore, it's not replacing a declining market. So Asia has to grow exponentially compared with Australia. Australia's still delivering fantastic opportunities for us. You know, commodities, resource boom is showing no signs of slowing up, and it's not just the mining that we do, but it's the railways, the ports, the process plants, you know, all the infrastructure that goes in. And these LNG jobs, these are very, very long jobs, and they're only just starting to come to market. And, you know, there's 5 to 10 years plus of opportunities in that space. So Australia still has a really robust market. All we're doing is continuing to balance our portfolio and try to grow the Asian market and take advantage of our footprint in that region.
Hamish Tyrwhitt, I wish you good luck this year.
Thank you very much.
Thanks.
Appreciate it.